Well, there are two aspects to it. One is, stepping back and taking a longer term view. And when you take a longer term view, as history has always taught us, this uncertainty, whether it's, as we've seen, .com, GFC, even during COVID, that those that have a longer term view towards deployment end up making above average returns. But that's the longer term. The regular Joe investor, the high net worth investor or the retail investor, is very much affected by the noise. And when the noise is about policy that keeps regularly changing, flip-flopping, or coming up with what can be, from a media perspective, perceived as negative. To give you an example, restrictions on visas for students may not necessarily have a functional impact on the ground, but an investor investing in that will look at it and say, is this a reason for me to pause and maybe deploy either smaller amounts or deploy at a later stage when this is clear? Has nothing to do with whether that is actually true on the ground. It's just that investors are affected by that. So it does have an impact. Now, to Rishi's point, you take the flip side. You come to the GCC, for example, and there's clarity of laws, clarity of process. What developed market used to look at with perhaps a sense of humor as to, you guys have a lot of visions. Well, what turns out is that these visions are coming to reality, and these visions are providing a clear path. In some ways, the path is taking longer, but at least there is a direction and there's an end game. And I think that's what is causing a lot of investors to start considering deploying, not a complete shift, but deploying a greater amount into out of developed markets, into particular regions like the GCC.
And are the returns better?
The returns are better. When you look at where net levered returns compared to at least places like Europe, the returns are better.
So how's sort of real estate being viewed at this time of uncertainty? Often real estate is a place that people move to. Has that happened, or does this other levels of uncertainty make it a less attractive safe haven in certain places this time? How do you look at that?
Well, I think, again, you step back, there's a bigger macro picture that's a big uncertainty for real estate in general, in fact, for all fixed income, which is call it policy or call it fiscal policy, the amount of debt that the central banks have, not just in the US, but across the world, and whether that deficit spending and continuous growth in debt is going to allow the monetary side to effectively reduce interest rates. Now we're seeing cap rates and interest rates really become very sticky. And what that does, then you step into the more micro side, is that what that does, and I've seen that over the last 2-3 years, capital markets are not liquid, they're not active, it delays exits. Investors then don't have enough liquidity to redeploy. So in a sense...
And the cost of capital goes up as well.
And the cost of capital goes up. So in a sense, then investors take a look back, and then when you start seeing things like gold, crypto, going up by 2-3% every day, if not more, that becomes an attractive proposition. But again, that is all very short-termist in view. We always step back, have to step back and see over the next 5 to 10 years, where are the opportunities? So again, to Rishi's point, whether it's in student or in logistics or in some other sector, in medical, the smart investor would make the choices to deploy the capital and not be driven by the perceived safe haven of a commodity that is currently having a good time. However, we have to admit that why is gold rising, and why are people looking at alternative paths or sectors to invest? And that's the impact of the geopolitical risk or geopolitical spat, and why.
But interestingly, both of those are non-yielding assets.
Yes.
And so, there's something interesting going on, that people don't want long-term yielding assets. They want hard, whatever those are. I mean, they're a very different animal, aren't they? So, what does inflation mean at the moment? Is inflation, because often with real estate, the good inflation is healthy because it deflates the debt and it makes your asset in nominal terms more attractive, etc. But if it's sticky and the consumers aren't able to raise their payments for rents, or office tenants can't do that, it's a problem. So what is inflation at the moment? Is inflation a negative or a positive or a mix? Where does it sit?
Inflation is currently a concern when asset buyers want to negotiate a lower price. It is a concern when lack of clarity of investment decision is in the background. But in reality, if you look at the numbers, inflation is not an issue. It's not where the Fed wants it to be at 2%, but also is not, I mean, if you remember, when the whole thing about Liberation Day started, all the media had started talking about a repeat of what happened in 22 and in 23. That's so far proving not to be the case. So is it an issue? So far, it's not an issue. We're not seeing that in the numbers that are coming out. But is it a factor that's causing perhaps more nervousness? Then absolutely.
Rishi, one place that's not been mentioned as attractive is Europe at all. Does there come a point where people start to look through all of that risk of policy and the economy and the demographics and other things and start to see opportunity now? Do you see that as something, or is it too early days?
No, I mean, this is, we started to see a number of opportunities percolating in terms of the same sectors that we like across the globe, which is, logistics, some of the digital infrastructure. The problem is the issue with Europe has been returns have been so low for the average investor to deploy capital. And even though, and I always use this joke because they tell you German cap rates have expanded by 200%. Yes, but they were at 1%, now they're at 3%. They're still nowhere near attractive to any regular investor, to a let's call it institutional pension fund type deployment of capital. We don't see the positive story coming out, whether from demographics or from technology or from a business perspective, that would warrant a shift in focus. There was a bit of enthusiasm last year about Germany's announcement and the spending and the potential impact on infrastructure, but we're not seeing that yet come up in attractive propositions. We see that in the US quite a bit. We see that in the region, but we're not seeing the same in Europe, and hence it's from an institutional deployment or from a syndication perspective, not there yet.
So you're looking, but it hasn't hit that level yet?
Hasn't been here yet.